Let's begin to understand the two forms of money. The first form of money is literally known as active income, where you trade your time with money. So if you work for 1 hour, you get paid for 1 hour. If you work for 1 month, you get paid for 1 month as a salary. And that is where most people get stuck, that is job. And you might be thinking, Vivek, but how to get out of the job? I'm frustrated. How to go about this entire journey? So that is one parameter we need to think about, that doing a job or having a self-employment is not technically bad, because it will help you to give some capital to ultimately generate passive income. And that is what we will learn in today's session in a deep dive way. The second way is more like where you are self-employed. So say you are a CA or you are a lawyer or you are a freelancer, you get income, but still you are trading time with money, which means what Warren Buffett said, that the true investing is where even if you are sleeping, money should hit your bank account. But in active income, that generally doesn't happen. And unfortunate thing is 90% of population is stuck into this active side of the things. So no work, no pay, and that is the reason most people struggle with their retirement. Most people struggle with their end life, where they are not able to actively work. And that is where, what makes a difference between somebody who is stuck into that rat race and somebody who has actually become rich is the right side of the quadrant, where you see B and I. B is more like a business where you have people working for you, but still there is dependency on you, and there is dependency on how things work inside that business. And the ultimate freedom is in the last quadrant, which is called investing. And that is what pretty much in today's session we are going to explore and discover. What are different ways in which you can actually invest your money and generate crazy source of income? And if you do it rightly, even it's very, very easy to earn 1 lakh rupees per month as well. And I'll show you all the calculation and how you can do it and what kind of corpus you need. And even if you don't have a corpus yet, how to build that corpus and how to budget and how to save your entire game. That is what we are going to learn into this session. So please take a lot of notes. We will learn how to save, and most importantly how to invest, and what are different asset classes you can invest, what are different ways in which you can get passive income. And it is not like any other session where superficially there are accounts that okay, you invest in equity, you invest in debt, and so on and so forth. We are going to go really deep into this topic based on my experience, because I've invested in most of these asset classes. So I'll be sharing practical experience with all of you so that you can get real insights in terms of how to implement this. So if you have pen and notepad ready with you, just type "got it" in the comment box and let's begin this journey. Awesome. So let's come back to the PPT and let's try to understand the first what are the factors that you need to keep it in mind when you are thinking about all these asset classes. First, you need to know what is your time horizon, whether you want passive income for 1 year, 2 year, 5 year, 10 year. What is your horizon when you are putting money into these asset classes? The second is what is your risk tolerance, whether you are able to take that risk or you are not made for it. Okay. Third is what kind of reward you are getting for the kind of risk you are taking. Sometimes, even if you are taking too much of risk, you might not be getting the reward which you wanted. And finally, very, very important component which we are going to learn is the tax angle, because a lot of time blindly people put money into it by seeing high returns and thinking that it can compound well for me, but then they get hit with the high tax rates in their journey. So we'll also learn how to save tax or how to optimize on tax and how to plan for your tax and what is the tax angle in each of these passive sources which you can create for yourself. Okay, so let's first go into the fixed income side of the things. Now, what is fixed income? Can anybody tell me what is fixed income technically mean? Fixed income means, in a very, very simple terms, you get a fixed amount of money every single month from whatever way and source it is there. It is fixed. It is a contract that okay, if you have put 100 rupees, you are going to get 7 rupees no matter what, unless the counterparty or the person or the institution from which you have agreed to get it, that defaults, which means it closed down, right? So let's understand what are different sources which are very, very important on fixed income side of things. First, it is relatively low risk category. So if you are getting a fixed income, which means a promised income, and if it is in a reasonable range versus the current interest rate, most likely it is in a lower risk category. Okay. Second very important thing is most of these things are easily liquidated. Of course, there are some other exceptions inside it which I'll talk to you. So typically you get a fixed money out of it, and the time horizon is predefined that okay, you will get for 2 years, 5 years, 10 years, 15 years, whatever period is there, generally it is pre-decided. Now, what are different ways in which you can generate fixed income? The first very simplest thing is bank FD. So you put your money into bank, you get money, and every single month or every single quarter or every single year, whatever duration you choose, you get interest on the amount which you have put in the fixed deposit. Now the problem with this is it is heavily taxed. Like if you are in a 20, 30 or even like me 30% plus surcharge, whatever surcharge is there, it is not efficient to put money into FD. So even if it is giving you 7% return, after tax you don't even beat inflation, right? So that is the problem for FD most of the times. But if somebody is in a lower tax bracket, it's a great asset class to get passive income regularly to their bank account. The second is government securities, which is government bonds, where government promises you that, hey, I'll pay you this much interest for so and so period. Generally, it is for 5 years where these bonds are available, but it's pretty much safe, asset class, because you kind of have guarantee from the government. So unless the government defaults, you still keep getting money out of it, right? So this is where the second option is there. Now the third option, which has got started recently, is called corporate debentures or bonds. So all the companies also issue bonds and debentures which promises you interest. Say Asian Paints comes out with a bond and say, hey, you invest money into our bonds and you get 8% return. So these kind of structures are also available, and these bonds are readily available online. You can buy it online from Demat, and it's again with very, very good mode of getting a fixed income. Then you have corporate FDs also these days. So you have Bajaj Finance corporate FDs, ICICI Bank FDs, which also you can go about it. Now the last option is more longer duration but highly safe and good compounding machine, something like EPF. So if you are working, you are doing a job, your employee deducts money, it is called EPF. Then you have PPF, which is anybody can open, and I will highly recommend all of you to open a PPF account if you don't have it, because if your horizon is long and if you really want to compound your money for a long period of time without taxation getting involved in between. So all the money which goes up to 1.5 lakhs tax free, the interest compounds tax free, and the end interest plus principal, whatever you get it, is tax free, right? So if you want to have a longer horizon and you want to efficiently compound with a good tax planning, this is a very, very powerful tool. Now, a lot of people debate, it's a long duration, you should ideally put money into equity and so on and so forth. That is all crap in my view, because there are countries where for 5, 10, 15 years equity indexes have not moved. So I am firm believer of diversification, not putting all eggs in one basket, and getting wider in terms of asset class when you are investing. And I'll show you when you are budgeting how you can actually think about this. We'll go deeper into the calculation and Excel and all those things. So if this is clear so far with all of you, just hit a thumbs up so that I know that you have understood so far and you have got it, so that we can move forward in this game. The second, which is my favorite and which I've been helping a lot of investors with, is called what it is called stock market investing, right? So I'm again firm believer that equity compounding is very, very powerful, and we'll learn how to invest in equities and what are different ways to go about it. By the way, if you have a girl child, there is a very good scheme called Sukanya Samruddhi Yojana. I have personally invested in that. By the way, whatever I'm sharing with you, it's all what I have done and some of the asset classes where I have invested. Of course, you need to consult your financial advisor to suit to your personal needs, right? So whatever I'm sharing here is more generic, but yes, you need a specific advice from your financial advisor. The second is stock market investing. Now, as I said, we generally focus on active income where we are trading time with money. So when I was doing job, I used to also do that, and to an extent it's great because you get a capital to invest. Otherwise, without active income you don't get a capital, right? So it's good to have that active income. But even if you are doing a job or a self-employed, you can actually participate like a business owner by investing, where you are getting a fraction of a business, a share of a company. And if the company grows, say if HDFC grows or Asian Paints grows or Pidilite grows, and if you are owning the share of that company, your money actually compounds, right? So the returns are of course uncertain, although over a period of time in India, generally for last 10-15 years, 15% is a kind of CAGR you can expect from index and equities on a long term basis. If you do it right way, if you choose it in a proper way, if you do a right allocation, you can do even more, right? And I cover in my community also the process, how to select stocks, how to go about creating right asset classes, how to create a good portfolio, how to allocate properly. You can even do more. We have a lot of members who have done more than 50, 60, 70, 80, 100% also. But that is again, based on how you execute it, how you implement things. The another advantage of this is you also get a passive income in the form of dividends, right? So it's not just that you get a capital appreciation if the company grows, but every time when the company makes money, it also gives that money back to the shareholders, right? So they are putting money back to the shareholders who have invested into this company. Although we should not invest just for the dividend income, but even if we get like 1 or 2% of our entire corpus, that's also a great passive income to go for. Okay, so equity investment is another very, very powerful form of investing. Now, there are multiple ways where you can invest. First, what you can do is you can invest directly, right? And directly you can invest in two forms. You can either invest in Indian equities, or you can also invest in foreign equities. So today's time and age, there are options available where in India you can actually invest through mutual funds in overseas equities like Nasdaq 100. You can even buy direct US stocks, you can buy Hang Seng China Index ETFs, and so many such options are nowadays available. So if you want to learn about how to invest in equities, if you are just getting started, just hit Fundamental Analysis Vivek Mashrani. You will find an entire video. You will find a detailed Excel how to go about it, and you will get a step-by-step process in terms of how to go about this thing. And if you want to learn how to invest in US market, just type invest in US market Vivek Mashrani. You will get this video where I've covered entire details about how to invest in US markets. Okay, so I'm not repeating here, but that is also very, very powerful way. Another simplest route is through mutual funds, right? So you can buy equity mutual funds where you have a fund manager who is putting money on your behalf, and you can passively invest in index funds. You can actively invest into multiple multi-cap funds, small cap funds, mid-cap funds, large cap funds. But there are investors who make a lot of mistakes when they are doing mutual funds. How many of you are doing investing money in mutual funds in some way or other? Just type me or just hit a thumbs up so that I know how many of you are investing in mutual funds. Now, there are a lot of mistakes people make while investing in mutual funds. Again, I've covered a deep dive into one of the video called Be a Smart Mutual Fund Investor. So if you are investing in mutual fund, this is a must watch video. But again, it's a good way to compound your money if you don't want too much botheration. Of course, your direct stock investing can do better, but then versus not doing any investing in equity, this is a good starting point to go about. Now, the advantages of equity we all understood, right? So it is one of the asset class where you get returns on the higher side. Like as I said, around 15% is the normal CAGR. If you do it correctly, if you spot right opportunities, you can do even better. And best thing is, it is easily liquidated. So if you want to sell shares today, next day you get your money, and SEBI is talking about T+0, like same day you get a money, right? So that is where we are moving in terms of the liquidity in this asset class, but it requires skill. It is highly volatile, and sometimes there are big moves that happen into this asset class also, right? So that is where you need to be wary about, and there are a lot of options which are available. So again, I would highly recommend all of you to first learn how to go about it and then do investing. If you do it blindly, if you do it without understanding, then it may be double-edged sword where you can lose money in a big way also. And if you want to learn how to build system, how to systematically buy, add, sell, I do a free masterclass where you can learn it. You can bookmark this link. It's also available in the description below this video. So just check it out, and if you are really interested to learn more, you can join that session as well. Now coming to one more powerful way of generating passive income is unlisted equities. Okay, so unlisted equities, basically what happens is there are shares which are not in the stock market. Okay, so these are if it is a startup, you have startup shares of the startups. You can even be a VC where you are investing as an angel investor in an early stage of startup. Like I have invested in a couple of startups where I'm also mentoring them, and I also have shares of that company, but they are not listed on stock market. So these are fairly illiquid. If I want to sell, I cannot sell it immediately. Sometimes there are lock-in period also. So if you want to really invest into unlisted space, you need a big corpus. At the same time, you need to have that appetite of illiquidity, plus your fixed passive income should be in place. This also generates passive income, but in the form of capital appreciation over a period of time. And sometimes it's a very high risk, high reward kind of asset class, where if it works, it can make millions and billions for you, crores for you. If it doesn't work, sometimes it can backfire and you can even go to zero in this case. Another thing is, you also get unlisted shares of some big companies. Like say for example, as we speak right now, the company unlisted shares of NSE are available in the unlisted space. So you can actually buy NSE shares which comes to your demat, but it is right now not listed. You cannot trade it or you cannot sell it immediately. So it is fairly illiquid, but even bigger companies like this which are not listed, you can actually get shares of it. Now eventually, these companies get listed, like NSE will get listed, and then you can actually make slightly more money also if it works out in your favor, right? So that is also one of the ways in which you can generate passive income through unlisted equities in the Indian market. The next one is very, very popular, right? And no introduction needed for this, is called real estate, right? So you have real estate, which is a very, very powerful source of passive income. And there are multiple ways in which you can generate passive income in real estate. So the first one essentially in real estate is, sorry, let me go here. Yeah. So the first one is land ownership, right? So you can actually buy a land of a particular area, and you can even rent land these days. Okay, so you can actually rent land, say somebody wants to open a cafe, or somebody wants to do organic farming in your land, or if you build a bungalow on it and you want to rent out that bungalow, that is also very, very possible. So in that case, what happens is you get a flow also, and there is a lot of capital appreciation also that happens. Second is, renting out your residential villa or flats. So that is another way where you can actually go and rent it out and you get passive income. The another way is you can actually invest in commercial real estate. So you can actually buy office space or shop or a showroom, and then you get a rental income. Apart from that, you get appreciation also. Another way to go about it is, of course, going with the warehouse. So this is another way of commercial real estate, but very niche area where you can actually have a cold storage, or you can have a warehouse which you can rent out. Like today's time and age, you have Amazon and you have Flipkart and a lot of these companies which actually need warehouses on rent. So you can actually go about it if you have a higher capital. So the pros of real estate is, you get a regular income as well as capital appreciation. And you also get tax deductions, on maintenance and so many different things. So even if you have taken a loan, you can actually get a deduction on the loan interest and so on and so forth. The cons of this is generally you need a very high upfront capital investment. Okay, so you need a big amount of capital to deploy, unlike shares. Like you can buy shares worth 100 rupees, 500 rupees, 1000 rupees also. You can buy FDs of 1000, 2000, 5000, 10,000 also. But in case of real estate, generally the ticket sizes are huge. So if you are in a very initial stage of your investing, many times that is difficult. Also, there are a lot of issues related to real estate. It is illiquid, it needs maintenance, you need to have proper legal record of it, and also it is location specific many times. If you buy cheap but then that location doesn't pick up, sometimes you might not even able to rent out. But to solve that, there is a very, very interesting thing which has come up in the stock exchange, which is hybrid form of, trading a unit of a company or a asset in the form of real estate, which is called REITs. Okay, and I have done a detailed video on this. Essentially, what happens is, if there is a, say, big IT park, and they are getting some rent from that IT park, what they do is they create small units of it. So if it is 100 crore worth of IT park, they made, say, 10 crore units worth 10 rupees each, or 1 crore units of 100 rupees each. So now each unit you can buy for 100, 200, 300 rupees, and whatever is the proportionate rental income, you get it in your bank account. So now this is best of both worlds, where you can actually sell it very quickly on the stock exchange. There is no stamp duty in a big way. There is no GST which you need to pay all the time. There is no need of thinking about maintenance income and so on and so forth. So personally, I have invested into multiple REITs. There are also something called as infrastructure InvITs which are available. Okay, so which are very powerful form of investment also, where if it is a road or a port or any kind of assets, highways, you get unit of it, and again you get distribution in terms of dividend and rental income. And this is also tax efficient to an extent versus directly investing into real estate. So if this was useful, never heard about it, just type useful in the comment box. I'm again not going deep dive into it because I have a detailed video on this entire REIT. So you can just search REIT Vivek Mashrani and you will find a half an hour detailed video where I've covered tax angle, what are the different REITs available, what are the yields, what is the proportionate basis, where the exposure is there, which cities you get underlying assets, all those different things I've covered in that video. So if you want to go deep dive, you can go about it. Now, essentially, when you are investing into equity or real estate, you can actually do it in a monthly SIP mode. Like you can invest every single month in a systematic way, whether it is direct equity or it is indirect way of equity. So what I'll do is I'll show you a recent Excel which I created for equal SIP. So it is as simple as you put a amount, how much amount you want to put, how many months you want to put, how many stocks you want to put, and you can even add REITs over here, right? So your 2-3 stocks could be your REITs, where you are actually investing into real estate simultaneously along with equity. And it particularly changes based on the number of months you choose, the number of companies you choose. It gives you a specific amount how to go about it. So the link of this I've shared in the description, and I'll also share here. You can also watch this video which I've created for this. Okay, so just go to this video which is in my YouTube channel itself. Just type SIP Vivek Mashrani, you should be able to find it. And this SIP tool, if you want to download, I'll also give the link of this so that all of you can benefit from this. So you can download this SIP tool by going to technofunda.co/SIP tool. Okay, and I'll also show you how to actually budget and invest and how to actually generate 1 lakh per month income using an Excel sheet, where you can actually feed your numbers and you can actually go about distributing all these amount into different asset class. So we are coming there soon, but let's understand other asset classes first and then we'll come there. Okay, so next after real estate, now you understood real estate hopefully. The very important asset class is called gold. Okay, gold is again very, very famous in India. I'll just go to the PPT again, and let's understand what all things are there inside gold as an asset class. So gold and real estate, are very powerful asset class to protect yourself from inflation. Okay, so if tomorrow the inflation goes up more than 10, 15, 20%, One of the best asset class which will protect you from inflation is real estate and gold. Now, good part again in India is gold is imported, and gold generally gets traded in USD. So in INR terms, you also get advantage of rupee depreciation every single year. So around 5 to 7% rupee depreciates versus dollar. You get pretty much advantage of that. Now there are multiple ways in which you can put money into gold. You can buy physical gold, so you can have bricks or gold bars or in the form of jewelry also, coins also. And you can also have a digital gold. So these days what has happened is you also get form of digital gold. Now digital gold is like a, in the wallet it sits, 1 gram, say you buy a digital gold in Paytm, it will show you 1 gram in your app, but that gold will be lying somewhere in the warehouse on your behalf. Okay. So that is again a very, very powerful, innovative way in which it has come up. There are gold ETFs where you can also invest, and there are gold ETF is more like a contract, so where you can actually again have a ETF units and your gold is somewhere in the depository. And another very powerful thing which has come up is called SGB, which is called Sovereign Gold Bond. These are like RBI issued bonds where they give you a contract that they will pay you interest of 2.5% every year. On the top of it, it is also having some tax advantages. So if you hold it for like 8 years, you don't pay any capital gains. It is pretty much safe, backed by RBI, and also you get interest on the top of gold, right? So versus all other ways, personally, I have invested into direct gold so that, if there is any emergency, you can sell off and you get money even at a midnight. And remaining part, mostly I prefer SGBs, right? ETFs have lost the shine after the SGBs have come up. Only issue with SGB is sometimes it is slightly illiquid, like you need to wait for a couple of days if you have a huge quantity. But if you are buying 100 gram, 50 gram, is not much of issue as of now. Okay. So if you have understood the gold side of the things, just type gold in the comment box, right? So best part is it is maintaining value over time. So even half the night you can give it. Even if the currency goes for a toss, even if there is a war in the country, the gold will still, somebody will pay you for gold. And also it reduces your portfolio risk because generally it has a low correlation with equity. And the prices are slightly volatile. It is again not a fixed income instrument, but if you hold it long period of time, again gold has given anywhere between 10 to 15% return over a long period of time. So it's again a very important way of compounding and generating passive income for yourself. So you get interest and you get capital appreciation also in the form of passive income. So even if you are sleeping, you get money flowing into your bank account ultimately. Now there are a lot of other passive income sources which I want to share with you. But before I come to that, are you all ready to see the Excel which I was mentioning and how to navigate that Excel and how to go about it? Just type ready in the comment box so that I know that you are ready for that Excel knowledge sharing. Yeah, just let me go to the Excel application. Just give me a second. Okay, hope now you are able to see the Excel. So what I've done for all of you is I've created an Excel. Okay, so you can literally like put your age, like say if I'm a 35, I'm at actually 36 years old as of now. Okay, so let me not cheat it on that. Okay, so 36-year-old, say whatever is your current salary after tax, you can actually put your salary, say if it is 5 lakh, 10 lakh, 15 lakh, you can put it there. You can mention what is your general increment which you get every single year and how much you are going to save. Now, I generally, when I started my journey in my job, I was very, very, I would say aggressive saver. So I was saving almost 60% of my after-tax salary. Okay, you are not married, you have a shared apartment with your colleagues. It was a great saving which was there, right? So you can go as high as you want, but don't live like a miser. Live your life properly, but at the same time you need to balance your savings also, right? So you can define whatever percentage of saving you want to do. Like say I want to do 40% in the initial part of my life, then I want to go 30, and then I want to go 25, and probably later I want to enjoy more of my life when my corpus is big, so I'll save probably slow. Whatever you want to define, you can define here. Then there is an entire budgeting sheet which I've given here, right? So how much goes into needs, how much goes into wants, how much goes into luxury. In needs, what goes into food, clothing, rent, EMI, what goes into vehicle, tourism, gadgets, dining, what goes into clothes, luxuries, gifts, foreign travel, all the things I've covered. Now I'm not going to go deeper here because again I have a detailed video on this which is called, let me see, this is the video name. So how to budget, save and invest your money. Okay, so if you search with how to budget Vivek Mashrani, you should be able to get this. I'll also share the Excel with you so that you can pretty much use this in a powerful way. This is the Excel link. And most important thing which is relevant with this session is how to invest that money. Okay, now you can invest into three buckets. One is security bucket, which is more of your FDs, PPF, bonds, emergency fund, which I talked about in the initial part of passive income. The second, which is growth investing, which is pretty much your equities, index mutual funds, your normal mutual funds, your real estate. All these things fall into the second category. And then you have all these risky equity, as I mentioned, unlisted equities, startup investing, commercial real estate, cryptocurrency, all these things you can put it here. And then there is a math that, okay, if you do this at the end of the month, how much total you have saved into each of these things and what are the cumulative amount, and you can even do the returns out of it. You can do all sort of jugglery and you can see where you are getting 1 lakh rupees per month, and based on that how much you need to invest, and also you can tweak around the returns. So I've just hypothetically put the returns. If you think like all the startup investing will give 20% return, you can put 20%. If you think equities will give 15% return, you can tweak it. If you think a fixed income right now you get 7%, you can tweak it. So this entire Excel you can play around, you can define whatever returns you think can be generated, and then it will also calculate the future value. So if you feel like I need say at least 50 crore for retirement, you can actually do the math and you will get an idea how many years you need to work and invest and save before you retire into your journey. So it's like a perfect financial freedom calculator which I've shared with all of you. This is so powerful. People actually charge so much for these kind of calculators and these kind of sophisticated models. But I know that all of you are serious, all of you are regular listener to this channel. So I've shared this with all of you. Please make most use of this Excel. Okay, so you can go to technofunda.co/budget. I've also shared in the description. You can go through there. I've also pinned the comment which you can go through. But please make sure you use it. It's a very, very powerful tool where you can actually get to know where you are in your investing journey and where you are in your budgeting journey. Finally, there are some other powerful asset class which are very, very important in terms of your journey again, which you can consider. So if you don't have capital initially, and if you have good knowledge about any industry, if you are an industry expert, say you are into engineering and you are expert about something, you can even have royalty based income. So you can even write a paper, international scientific investment invention, you can do it. You can even write a book, you can write an ebook, you can even do some kind of invention where you are charging royalty. You can create some nice trademark for yourself, and that is also very, very powerful in today's time and age, right? So today investing in ourselves is one of the powerful assets which I want to highlight, which can even generate passive income for yourself. So invest in your skills, invest into your learning, invest in terms of becoming better person, and that can also pay you good in terms of passive income if you really use your brain in a right direction rather than spending time on OTTs and just wasting time on social media elsewhere. Apart from that, you have cryptocurrency, you have NFTs, right? If you are a good photographer, if you have got some good followership, you can even create non-fungible tokens in today's time and age, which can also make money for you. Apart from that, of course, collectibles, stamps, coins, arts, that can also make you passive income in the long run, give you capital appreciation. If you are good in your knowledge, if you are expert in something, you can even have today's time and age, something like YouTube, something like good content creation that can also help you. Okay, so in that sense, you are truly helping others, and in return, you are actually getting some money, but that is also very, very powerful asset class in today's time and age. So in essence, you can define these 7 sources of passive income which we have discussed. First is fixed income. To recap, we discussed about PPF, FDs, bonds, EPF, Sukanya Samruddhi Yojana. If you are retired, there is one more senior citizen savings scheme. All these things you can tap it and you can compound your money. In terms of real estate, we discussed about commercial real estate, residential real estate, land. We discussed about REITs, which is again a very, very powerful way of your investing and generating passive income. Then we discuss about gold, not just traditional physical gold, but ETFs of the gold, sovereign gold bonds, where you can also get interest on the top of your gold appreciation. We talked about direct equities, we talked about mutual funds, we talked about unlisted equities and how you can invest there and how you can compound your money and generate passive income. We discuss about a few more other asset classes like royalty on your invention or your book or any of your digital asset content creation. You can actually earn money. You can earn money through crypto, through NFTs, and so on and so forth. So this information is only for your knowledge purpose. I would highly recommend all of you to do your individual risk profiling, consult your financial advisor, and then take decision otherwise. But we have a lot of resources which you would like to explore later on a lot of these topics which we discussed. So if you want to learn how to do direct equity, how to do fundamental analysis, there is a video on this channel. If you want to learn how to invest through REITs and InvITs, there is a detailed video on this. If you want to learn how to budget and use this Excel efficiently, which I shared with you, you can also go about it. If you want to also create emergency fund and nail down all the things which are required in your personal finance, go through this video. If you want to do SIP in direct investing or in the form of mutual fund, go through this video. There is a detailed video on this. If you are already investing in mutual fund and if you want to do it in the right way, go through this video. If you want to invest in US markets, there is a detailed video on that as well, right? So hope you understand that you are sitting on gold mine. We are doing a lot of discussion, lot of knowledge sharing on this channel so that all of you can benefit and you can compound in the best possible way. Again, thank you so much for being with me on this video. I'm Vivek Mashrani signing off, and I call myself as TechnoFunda Investing Specialist. If you want to learn more about how I blend technicals and fundamentals to actually compound my money and how I've been through this journey, please feel free to check out a lot of other videos. And as I mentioned, the masterclass which you can also attend. And that's it for today. Thank you so much again for joining. And if you're not yet read my book, you are most welcome to check it out on Amazon. Both of them are bestsellers. You can compound and 100 personal finance actions which you can take. It's called Action. It's an acronym which explains to you how to invest, how to budget, how to plan your finances, and how to achieve financial freedom in the best possible way. So that's it from my end. If you loved this channel, don't forget to subscribe this channel, stay connected, and we'll see you in yet another powerful session which we keep doing on this channel. Thank you so much again. God bless and keep compounding.